The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday at noon, 877-927-6648. And great program we've had so far. Let's keep it up here. The Dow's down 52 at 19,899. S&P is down 5 at 2265. You got the comp index down. No, it's up 272. No, it's up. Yeah, very good. At 54.79. Now the volatility index at $11.88, down 17 cents. We're going to be watching this very closely. Couple of reasons. It's down in an area where this is where it starts to try to find a base. That's where it could have a bounce. So let's watch it closely. Let's just say that once it gets to the 1230s or higher, this market will sustain a down move. And I said to subscribers to my opening call, it's not the 20,000 that's the area. It's really the resistance that's been reached. Look, if I go to, I haven't even looked at this chart for a little while. Yeah, this chart right here, the pattern that I showed, the schematic of a strong leg up and then a rectangle move to the side, and then like a propeller shaft, an equal one-to-one move to the upside. That's it. That we've accomplished all that. We've accomplished it if we take the lower highs that were formed right there. I wonder if I can do this. I don't want to really make it messy, but I do want to explain it. So let's just make it for the moment. I'm going to make it very heavy. Star weight, just for the moment, right there. So that thick line, in fact, you know what? I'll make it a solid line so we know what we're talking about. That solid declining line was the breakout. And if you took a one-to-one, you'd get to 19,900 in the Dow from the level right there that Ictus, that little moment there on the 7th of November when the market broke above that trend line. So we'd be looking at 18,230. That says very clearly that we're in an up move. And the exact one-to-one of the outside of the rectangle, which is something, how can I put it? The traditional use of the way I use it as a Chapman wave falling axe formation is the one-to-one. In this particular instance here, the big leg up, strong sideways move, and a move equal to that on the upside. The theoretical pattern would say that you take the outside of the rectangle and you move it above, and what do you get? In that case, you get a move all the way to 20,200, somewhere around there. Well, within that context, we are struggling. But what I said to subscribers, it is the ceiling that was reached when we went to this peak F, let alone the peak G, but the peak F that was made in the Dow on the 14th at 19,966. Quite a while back, I said, I'm anticipating that we get to the 19,900s, maybe even the 19,990s, and we fail to get to 20,000 for many reasons, not because it's 20,000. Okay, now let's get that out the way. Dow 20,000, the moment we get there, it's a done deal because you've entered a whole new vista, a whole new panoply of numbers, starting with 20,000, just as when the S&P went to 2,000. So that's going to be really important in the psychology. But at this point, it has nothing. It just happens to coincide with resistance we're looking at. Look, made a big deal yesterday. I spoke about this declining trend line right there. I said it's a pattern that we call in the Chapman wave the falling axe. We've been discussing it. We discussed it last webinar, the second webinar of my 3-webinar series. Still time to get in because you have time to review. And then the third one's coming up on Tuesday night where I start to put in, you see, this is the 120-minute chart. Right behind you, there are two of them. I just wanted to show different patterns on either one. This is the daily chart. And then if you put it into context, here you've got the E-mini bumped up against the same resistance. There's the top at 2273 back on December the 13th. Very next day, slightly lower high. And then a whole series of slightly lower highs and quite stronger lower lows. This is very important. That's the trend line. It's got nothing to do with 20,000, got nothing to do with 2273. It has to do with trend line resistance. And that to me is absolutely imperative. And it has to do with a single leg A up in the weekly charts that might be an E, might be an A. I'm calling it an E/A with my preference. My bias is really for an A at this particular time. Here's the 120-minute chart, made a peak, E and Chapman wave. What do we look for? We look for 4 consecutive peaks to a peak D, but it can go to an E. Look at that D, how important it was. Look at that D in the weekly chart of the E-mini. All right, let's go through the numbers now. I've got to just move this chart out the way. That's Tom's Bloomberg. Okay, so the Dow's down 67 at 19,874. S&P is down 617 at 2264. Comp index is now down 4 at 54.72. The VIX index has moved up. It's at 1184. As I say, if it goes to the 1220s, 1230s, you're going to see selling increase, selling intensity increase. Now, let's do a couple of other things. I want you to do the QQQ series. It's up 23 cents at 120.42. This rotation through the different sectors is really what we've found over the last 3 to 4 weeks. It's been a high-level consolidation up until this point. So the Q's struggling. There'll be a big difference in the wave count if you can go above 121.52. That is the high of December the 27th. That changes a whole bunch of things. If it happens this week, that's good. I don't think it'll happen by Friday. If it happens by next week, that'll be leg D in the weekly chart, and then we're going to assess. I want to move this out the way now. We were done just for the moment with 120-minute charts. And it's leg C in the monthly of the QQQ series. It's leg B in the S&P, and it's leg D in leg C in the S&P, leg D in the Dow. It could be a peak because we haven't made new highs so far in January. Whoops, I need to correct that. INDU. Yeah, right. So let's go to the IWM. IWM at this particular point is down. It's stuck in this rectangle formation, slightly lower highs, slightly lower lows. The high that was made on the 9th of 136, was that 62? 82 is still intact. And we've got a G/B in the weekly chart. Parameters to watch is a close below 134 in the next week and a half will be very negative. Now we get to gold. And this is the first time that I've really been looking at gold with trading positions for subscribers very favorably, even though I consider it so far just on a purely technical level. I have to consider that I have to treat it as a bounce as the dollar takes a breather. Hey, a bounce in gold can sometimes be really big if you time it correctly. So gold's up 17 at 1182. We happen to have different things in gold, as most we've had in gold for a long time. Let's just look at the dollar as we're about to go to a break. Whoa, look at that. You remember last week I was talking to Tom, I said the rising highs, it was a Tuesday. Yeah, the rising highs and low lows says you've got to watch this, have this cone formation very closely. I'll be back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. We're back. Dow's down 75. S&P's down 6. So let's continue this. So the dollar, see this expand. Let me make this nice and thick here. In fact, I'm going to make it solid so that you can see exactly what I'm looking at here. I'll make it solid. This time I'm going to make it red, because that was the barrier that we were looking at. And this one I'm going to make green because that should have been support and has broken the support. So let's make that solid right there. I love these tools. Okay, so the dollar's broken below the support in this expanding cone formation or wedge formation. And as a result, it says that there's a good chance to test the 100.73 level of the 14th of December. But most importantly, it's the 9-period moving average of 101.22. A close below that will be the first close below since we broke out back on the roundabout October, end of September, beginning of October. Isn't that incredible how that 9-period moving average can be such a dream machine, in fact. Okay, so the dollar is not good. Euro should be rallying, and the euro it's got the different pattern. It retested, it went to a trough G, and gee whiz, here it is, in a very strong single leg A up. So that was a B minus because it failed. B minus. And this is a gray B minus, and this is a gray A. Why do I say gray? Because it's under major resistance at this point. It's a retracement failure mode. That's not negative. It's just an explanation of what it's doing. And this candle cannot be leg A, even if it goes above last week's high, until there's a higher low in the weekly chart. All right? So now let's get back to our story and say that in the context of currencies don't usually just turn down on a dime. But what happens sometimes, not often, but often enough to make a point of it, is that what happens at the beginning of the year can set the stage for a pretty good move in that direction. So this is the beginning of the year. The dollar hasn't made a new recovery high. We're going to be watching this real closely. I thought that this would be a counter trend rally. And if you look at the euro, remember what we said? The bar that takes out the lowercase m pattern low of the left side, either that bar or maybe the second bar, the next bar after that, has to be a close above the left side low bar. And if it does, it can go to the next moving average or peak of consequence, and that would be 1.085 in the euro if it's successful here. Okay, enough with that. What I really want to do is to show you something. I'm going to go to my long-term charts, which I show my subscribers almost every week. I think I forgot to show it this past week because I was so busy with many other things, because I thought there would be a trend change, and I was discussing the trend change. And I discussed a couple of weeks ago that there's a possibility that the high of the week of the 16th of December at 31.97 could become a peak E. Maybe there'd be a leg D, a leg F, and maybe there'd be a D in the 10-year and the 5-year T notes. But in fact, this seems to me at that resistance that I defined way before. This is the yield, my triple yield chart. This is 30-year T bonds in white, the TYX, the 10-year T note yield, the TNX in yellow or gold, brownie color, and 5-year T note yield in the cyan light blue color, FVX. And this is suggesting to me that yields, at least for the shorter term, are going to be pulling back a little bit more. And that's the reason why I thought that this whole panoply of instruments that we're looking at that was suggesting it's not 20,000 on the Dow. It is this phase that we're in that has just bumped into serious resistance. We should have just sliced through 20,000 if it was nothing. And we will still do that at some point, but we're not going to do it at this particular point. If, in fact, remember VIXy, Dolly, Goldie, and Bondy? That's the VIX. If the VIX rallies, if the dollar pulls back, if bonds rally, and if gold starts to move higher, we're in at least a shorter-term trend change. Hey, how do you see this? You look at it like this. You see here, first of all, this is the South African Dow Jones South African Stock Index. It has some goals, I believe, but it's not the gold index. It just has some of the goals. And look, it had a good retracement. It's pulled back, and now it's within the context of, look at that beautiful cyclical low that it made. So it's in the context of within the lower range. It's in the consolidation phase, and that's one of the reasons why I think I'm looking at the dollar monthly and weekly that they still have tremendous strength. So I'm calling this, even though we're trading it as if it's one of our more intermediate term positions, I'm calling this in the gold area a counter trend rally. Counter trend rallies can be big. Look at wood, WOOD. This is the iShares. Oh, coincidence. JB in the den just looked at WOOD. iShares Global Timber and Forestry ETF went to a peak D. Now, in the Chapman Wave methodology, Ds are absolutely, they are key to the methodology. You can do other things, but D is really, everything formulates around D, especially on the upside. You get on the downside, look at those Ds, the D and the weekly chart of the HGX, the Philadelphia Housing Sector Index, made that peak D top at 252.20 in August 21 of 2015, pulled back very sharply to the 180s, rebounded to a higher high, I forgot to type that in, to 256.81 the week of the 29th of July, and now he's having a tough time. And what do? We draw the falling axe in. That falling axe, I've been discussing it all week, lower highs and much lower lows, and see if we can break the upside. And look at that barrier right there. And wood is the iShares, as I say, Timber and Forestry ETF. It's made a peak D, little right there. And we'll see what happens over the next 3 weeks. But in the meantime, Ds are what it's all about, and you've got the D with the left side, right side price time match. Took the price, but the time is extended a little bit, and then it's pulled back. So these are saying we're in a very critical area, because if the WOOD pulls back from the 54 area to below 52 in the next 2 weeks, that's going to be not a pretty pattern. It's going to be, say, we're going to go lower. And if the HGX, the Philadelphia Housing Sector Index at 243, breaks under 231, that's a little far. Let's go to no, I have to do that. Yep, 231. That's the level that I'd be getting quite negative. That's going to be negative. On the upside, all it has to do is break above 251.46, and that'll be very impressive. That'll say it's going to test the PT. All right, enough with that. I think I covered all of those. Yes, I did. Now there are a couple of things I want to look at. I haven't looked at crude oil CL. So the answer to the question I had about the TNX by GT, yes, I believe that the 10-year is going to be pulling back a little bit more. Now, when we're looking at crude oil, remember I said I think it's stuck in a range. I drew the rectangle pattern. There's really not much to discuss. I believe there should be a leg D in the weekly chart about 55, 58 in the continuous contract, and then it's going to bump into much more resistance in the 56s. If it snaps into 58s, something else is going on. The weekly chart suggests that it should come back and maybe retest this Chapman wave inside track support level between 51 and 50 over the coming 2-3 weeks. We're going to be watching this quite closely, actually, because a breakout to the upside would be positive. Now, what we're looking at is, I'll show you the 10-minute chart. Yeah, that was a B minus in the E-mini. Sorry, a C minus. Oh, I'll talk about that when we get back. I don't want to rush into the conclusion. But yes, I'll be back. Dow sounds good.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So the question that came about was, is the Japanization of our bond yields theory over? I would say that this is the first inflection point of consequence that I have to take into consideration as being really important. But there is a belief that rates should go higher. There is enough evidence to say on a selective basis, the Fed could in fact go ahead with what they want to do. My contention is that there's a lot of wishful thinking here. The reality isn't quite up to what the wishful thinking is. And at the same time, the deep negativity isn't there at all. There shouldn't be deep negativity. But there are areas within the economy, and I'm including, I have to include the debt. I have to include a lot of factors. And it also includes the type of job growth that we've had that suggests to me that within the context of the markets, January is going to give us an incredible amount, not even January, probably the first 3 weeks, 2 to 3 weeks of January, going to give us an incredible amount of information about the year ahead. But at the same time, it's going to give us information about what is working, what isn't working, and perhaps the reasons why. And that's really what I want to dig into, the whys. Because if we can understand what the question should be, not the answers, but if the correct question is asked, then you can come up with an answer that is a viable answer instead of make-believe. So I'm looking at this, and there was a question. Someone sent me an email saying, we didn't get, Hillary didn't win, so we didn't get those three Democrat in sequence nominations and then the administrations, which is one of the things that I was looking at, that it was a possibility, even though over a year and a half ago, when no one even thought about it, I said Trump and Clinton and Sanders is going to be the bugbear, is going to be the one that just really comes in and changes things in all time frames. What changed it for me a little bit, because when we were just looking, we were so deep into the woods, it was just a little bit difficult to step back, was the amount of negativity that Trump himself created just to keep his name in the limelight most of the time, and it worked fantastically. And what I also thought was that I recall every time that there was a huge infrastructure for the Democrats over the years to get their people to the booths to be able to place their vote, and Republicans didn't always do that, and I thought that could create last minute chaos. In fact, it didn't create last minute chaos, but the other way around. So what now happens? And the two plans that I had haven't really changed. And the first one was in March of 2017. If we survive 2016, that'll be one of the most difficult periods. And the other one was the fall of 2017. And so far, I'm thinking more towards the fall of 2017 as maybe a pretty serious top, but we'll deal with that when the time comes. In the meantime, back at the ranch, we need to get some kind of a pullback here of consequence, a deep breather. I'll go to the very next question, which was the XLF. What about it, and what about the stocks within it? I think this is the same rectangle. I think this is distribution. The way I'm analyzing the market right now, the sideways move to the tops that were made back in mid-January in most of the key indices, I'm thinking of it as a distribution phase. And therefore, we should be pulling back. And that rectangle that I've drawn in so many charts with maybe a slightly higher high, but mostly lower lows, so even slightly lower lows, I'd have to say at this point, I think that's the plan. That's the way I'm looking at it. So if you look at a JP Morgan, look, same thing. Peak D, what do we look for in the Chapman wave? Peak D, there's your peak D, gave an instant restart. Second peak D, right there with a high of 87.76, trading now at 85.56, big deal, 2 points. Look at the monster move. But I think this is going to turn out to be a peak C and a pullback. And a leg B, I don't know about a peak B in the monthly. Huge, massive, bullish move. But now it needs to digest these gains. What about, I was asked about Goldman Sachs, which I bring up all the time. I'm just having patience. I'm waiting for Goldman Sachs to pull back. Pulls back sharp enough, I want to get heavily into Goldman Sachs because I think that's going to be part of the next big phase. Look at that. I don't know. I can't count anything but a leg A in the monthly. That's impossible. That actually takes us right to August, September if we alternate through highs and lows to higher highs. So let's just say that the financials and the Chapman wave need a pullback. They don't have to listen to me. I'm just saying, technically, the MACD and stochastic are very poor in Goldman Sachs. The same thing with the BKX index. BKX, right there. That's the Keefe Brewitt Bank index. Yeah, same thing. It went to a slightly higher high. So it's gone to, what is that, A? I think that's a G. But whatever it is, the way I'm looking at it, I believe that rectangle that I drew in a long time ago, I think that rectangle at 92.03 down 1.69, I think that's a leg E. A leg E in the weekly chart, I think we'll be pulling back. In fact, we might have started it already. And what's really important about this, we want to see what happens, say, to the SMHs, which is a semiconductor index. See, that's a 7170. It's pulling back, and the H pattern. I think that this is a leg D. It's going to be a peak D by tomorrow in the weekly chart. I think the semiconductor should be pulling back. I would have a target between 70 and 69, at least in the shorter term. If you're looking at, what was the other one I was looking? Oh, the IYT I was asked about. IYT is the transportation index. It failed to rally. It's using the 9-period moving average as a barrier. And I suspect that this is a peak E. I'm waiting for tomorrow because I really can't put a down arrow until the MACD crosses negative in the weekly chart. But I'm thinking that this is it. And let's just have another look at the VIX index question again about the VIX. The VIX is starting to rally a little bit, 11.87 up 2 cents. Woohoo! But I think it will, by the end of the day, start to move a little bit more. It's right in this area. As I say, this is an area that we tried to buy the VIX. We had a nice gain the other day, but we've given back some of it. So I didn't want to mess with it yet again, although today would have been perfect, I think. I did say that this is the area that I like it. So then a question about M, which is Macy's. Look at this. Gap's down. I mean, Macy's, one of the best of the retail. People tell me over and over what a great guy this is. Hey, great guy, mister. You must be suffering. 73.61 was the high in July 2015. You're trading at $30 right now. That is a massive decline. What was that? 60-something% decline. And you're up against Amazon. You're up against some really tough stuff out there. Look at the retail index. Look at the retail ETF. It is called the ARCA Van Eck Vectors Retail ETF. Remember, we wanted to short it right there, and then we tried, and we just missed it by a couple of pennies. And then I said, too many people said they can't actually get the shares. So I didn't really want to mess with it. But I said it's in a sell signal, and that was a peak E way back in 2016 in August. Peak F, the last one, the rally failure on the 13th of December. This is tough stuff, let me tell you. But if you look at the monthly chart, it's not all that bad. But I think that we're going to be pulling back in retail. I think most of the sales are done. We'll be watching that. I want to see where General Motors is. Pulling back? Yep, pulling back after the big move yesterday, down 73 cents. Hey, I'll talk more about Made in America when we get back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi everyone, Basil Chapman. Let's just get out of this. The 2-minute chart, trying to find a base here. I'd said before that the 10-minute chart looked like it should go lower, and there it is. It's lowest down in leg C. So a couple of things are going on here, but what I want you to do is this. Made in America. This is something that I discussed in great detail back in, let's see. This is called The Psychology of Investing. Lawrence E. Lifson and Richard Geist are the editors. And it's a book that was produced out of talks that were given by a number of people. Let's see, you had, what's the name, Cohen. I remember her talking, David Dreeman. A lot of people that some of the older folks will remember, Mark Hilbert. Misuse of past performance. Anyway, this book was put together by some of the talks given by the Harvard Medical School on the psychology of investing. I was a guest a number of times, and they asked us then to synthesize our thoughts. It was back in 1998, 1999, to synthesize our thoughts, and they put it into a book, and the book is called The Psychology of Investing, published by Wiley. And my chapter is chapter 11. And I called it The Stock Market Hysteria Still to Come. One of the reasons why I had done this was back in 1988, I had, together with someone else, I had written a whole thesis on what I thought was the mega bull market still to come. And within it, the reason why I want to read this is that the opening chapter, and this was back in the summer of 1988. This was after the crash. I'd actually started writing it before the crash. And my service was called the Chapman Market Line, summer of 1988. And this is a quote: "The mega bull market to come." Here it is. "Stock tickers at McDonald's, record high sculptured skyscrapers, 250 mile per hour luxurious grand touring cars, 4,000 passenger ocean cities to nowhere. As the supercharged Dow accelerates to ever-increasing record highs, most of the socioeconomic perils of the mid-1920s point to a mega move in the Dow just beginning to unfold. The seeds of a surge into the decade of the mega trends have already been sown." Well, the irony is that I kept updating in 1999, saying that the Dow should go to at least the mid-teens, maybe even the 19,000s. But I did not see that later that year, an incredible amount of money, a mega cycle of money, would not go into the traditional Dow, but would go into an untraditional NASDAQ 100, into the highest of the high techs. And that's where all the money went. I'm thinking that this is the coda phase that says finally the Dow is in the right area, and that this next coda phase will include some high techs, will include some crazy NASDAQ stocks, but we might be shocked at what happens when the Made in America, and this was something I'd spoken about way back when I even wanted to write, I think I can't remember if I did, to the head of General Motors to say, why are you using plastic parts in engines in the 1980s to build junk when Japan is producing a car called the Toyota, what was it called? The Toyota Camry. And they're getting better and better and better reviews all the time. And that was, 30 years ago? We're only now becoming a quality focused medium in the United States. And I had blamed the unions. I blamed the head of the unions. I said, they're as culpable as the head of General Motors and head of Ford. Because if you turn around and say, oh, we'll accept anything you throw at us, that's wrong. You should be saying, my workers will not work with junk. We will not be making this crap, this absolute junk. That's what American cars were for 20 years. It's just impossible. Our workers will suffer. We want the best of the best. Oh, gee, I've got a rant. How did I get that rant out? All right, let's go to Brenton Martinez. That'll cool me down. We've got Scott. Scott, Safety Harbor. Scott, are you there? Maybe I ranted too long. Okay, Brent, you're there. I'm sorry, Scott. You can call back. I'll get to you. So you wanted to look at Brent?
Well, just first, let me say Happy New Year to you.
Oh, Happy New Year. We haven't even spoken. Yes, Happy New Year. healthy Happy New Year.
Same to you, Basil. I have several equities in this area, the miners, but in particular today I want you to look at First Majestic, which is AG, is the symbol. And my specific question is, looking at the chart on a daily, starting back in October, there was a series of higher highs, each time kind of selling off. And that last high sold off, precipitously down to, under 7. That's where I bought it. And my question is, it seems like if it can get through that area, what do you think it could do if it were to surpass that?
Okay, so this is really important. Folks, we're looking at AG, First Majestic Silver Core, and it's trading at $9.27. This is a $9 stock that's up 10%, 11% today. That is incredible. So these gold stocks are absolutely on fire. Not all of them, but many of them, especially the smaller ones. And I'm looking at this, and it hit the 200-period moving average, just as it did when it hit the DP. Yep, there it is. Peak D back on the 7th of December. At $10.19. Wow, when these things take a tumble, they take a tumble. So it goes from the 10s down to the 6s, 6.662. So now it's at $9.27. That is a massive move, almost 30% move. Okay, this is what I think I'm going to be looking at. I'm looking at the weekly chart and that previous peak B minus that took us to the last low back in the week of the 23rd of December. This is a leg A, and I should change it to the color of gray. And the reason why I make it gray is that if it was able to pierce and then close, it really needs to close above $10.19. That was the high of the 9th of December. The moment it does that, I'm going to make that a blue A, and that's going to imply that there could be an even stronger move to the upside. I'm not sure if it'll get to a D because I need the stochastic go from the 13% level on the weekly chart to 20%, but I'm pretty sure that will take it there. And then the MACD will be crossing positive. Right at the very short term, what I'm going to say to you is that it was repelled at the 952 level, which is the 200-period moving average, even though it went to 961 today. I like the action very much. I shouldn't say I don't like the speed, because that's exactly what you want if you're looking at a V-shaped formation. But to tell you the truth, until AG, First Majestic, is able to close above $10.19, the high of the 7th of December, I have to consider that it's a retracement mode. Because the dollar's pulling back, everything about it looks good. I'm just not, maybe I need to wait till the end of the day or maybe tomorrow, but I can still only put in a plus sign in the daily chart. I haven't yet got an up arrow, even though it's a spectacular move. I just need a little more evidence to be able to say it's going to go from a buy signal to a buy mode. Nothing about it is negative, but I need to see substantial sustaining power on any pullback here. Hey, can you hold on a second?
I will, Basil. Thank you.
Okay, good. And I hope Scott can call back, because Scott, I want to talk about that very issue that you wanted to talk about. So we've got Brent holding. Hopefully Scott will come back. AG trading at $9.25, up 88 cents, and the Dow's down 114. S&P's down 9. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Folks, we're back. So just a whole bunch of questions I got, but let me do this. I've got Brent on the line. So, Brent, I don't see any problem here because the dollar is pulling back. Gold should be improving. I'm just saying that I need to be able for the weekly chart to give me the kind of reading that I want. I need to see it close in the low 10s, and then I'm going to say, wow, that is fabulous. Can have a bit of a rest, but there should be higher highs. I'm not sure if the weekly will go to a C or a D, but I think it has then the capability of going to at least a B, while the daily goes to both a C, a D, and even an E. But then what happens is I want to see the stochastic in the 80% area as it's holding up in the 10s. If AG can get there, that would be very important to me.
I agree. That's the area that needs to surpass. So thank you very much, Basil. Have a great day, and thanks for your help. Okay, you take care.
My pleasure. Have a great year, and thank you for calling. Always appreciate it. So a couple of things just to get to this. Greg had asked about CGI. Let me just do this CGI because it's in the trucking area. It was on my list a while back as a potential buy, but in fact, it went up by itself all the way to the 950s. It went down to 7, and now CGI at 825, down 60 cents, has been repelled at the 200-period moving average. And the question is, what about it? Was one of ours in my opening call. I'm going to say hold off right now. I'm just going to hold off on many of the long positions. Rather, we're looking more at the shorts, so long as we have are in the gold in other areas. And in the biotechs, I think, are now much more interesting than they've been ever before. So what I'm looking at here is that was a question there, and Scott had called in. Scott, call me tomorrow. I wanted to speak with you about this very stock. So I'm sorry I couldn't get to you today, but you wanted to look at X. I think X is right in this area. I said choppy. I think your timing is best because you do it on a very short-term basis. I'm thinking between U.S. Steel down 174, 35.59, between that 39.14 high. I don't think it's going to go much higher than that. It might just nick it and then come back again. I think it's in a trading range. But if U.S. Steel breaks under 32, I'm going to say hold off. And I had said, I think holding off for a little while is going to be good, but you're a shorter-term trader, so that's good. Just grabbing it and getting out, that's fine. But right now, I think it's in a difficult area. It's just in a sideways consolidation. It needs a breather. It needs time to recoup after a magnificent run all the way to the high 30s after being way down just months ago in the teens. So we're about to go our close. I'll be back with Tom this afternoon. Don't forget, I've got my webinar series coming up. I'm explaining all these different actions. I'm explaining why we're long, the characteristic of what we're looking at in the long positions. I'm also looking at time frames. It's going to be very important, as I was talking to Brent a moment ago. We want to see the next time frame, not the daily, but the weekly, start to improve in something like AG that he was looking at. And that's going to be very important. Will these gold stocks go into weekly time frames? And is that going to be something that, let me just go right here and I'll show you exactly what I'm looking at if I can find it. And this is what I've been doing every day, showing how we get into the stock using the naked chart, the stochastic, the MACD, putting it all together with the 9-period moving average, and in this case, the 7-period moving average. I show the inside track. I show the cup formation. I show the target Chapman wave inside wedge target line. Look, we went right to it 3 days ago, and now we're back right at it again. This is very important. We're looking here at Nova Gold stock that we have. These are all things that I'm teaching in my webinar series. The third one comes up Tuesday night. Think about it, because the other two have been archived. They're going to be on your page. You'll be able to go over them as many times as you want. This is the action we look at. Here's the way we looked at GDX. Same thing. Look at that huge leg B. We got in over there. It's in leg B. There's the naked chart, the stochastic, the MACD, and the whole thing together. And there's the price time action. Just pierced it. Hey, I hope you have a good day. Be back tomorrow. And we will see you maybe later on with Tom O'Brien.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.